Hi, everyone. Nice to see you all. How are we going? Happy Friday. Thank goodness it's Friday. Am I right? Has it been one of those weeks for anyone else or just me? We are so excited to be chatting today with the amazing Besa Deda to talk all things the economy, the budget. How does it affect you? How does it affect me? How does it affect your mum, your kids, all the rest of it, your business, all the important things? Let me leave it to the fabulous Kira from Ruby Connection to kick things off, and then we'll continue today's conversation.
Thanks so much, Meggie. As you said, I'm Kira. I'm Senior Manager of Women's Markets, and I am so excited to be back here again today. I have the absolute privilege of running Ruby Connection, and I'm really, really stoked. This is the next session of our monthly Lunch and Learns. I can see there's loads of new faces that have joined us today, so welcome, welcome, welcome. For those of you who don't know, Ruby Connection is Westpac's online community for women. It's a platform where we can all come together, inspire, educate, and take control of our own financial futures together. So we're so excited to have you with us. Please continue the conversation. But for now, I am so very excited to hear from our wonderful Besa Deda. So I'll hand it back over to you today, Meggie, and thank you all so much.
Awesome. Thanks so much, Kira. For those of you who don't know, Ruby Connection is an amazing free resource that you can check out a heap of, amazing financial literacy resources, budgeting resources, all sorts of things, profiles on amazing women. Speaking of amazing women, Besa Deda, it is such a treat to be sharing the Zoom room with you today. You wear many hats, one of which is the Chief Economist of St. George Bank, but I'll let you fill us in because you like to think of it as, you have multiple children in terms of your job. Talk us through the other roles that you play as well.
I do, Meggie. I've got 3 children at home when I'm not at work. And then at work, I laugh and say, well, I look after 4 children. So my firstborn is St. George Bank because that's where I started the career in this group. And then I added to that brood with Bank of Melbourne, Bank SA, and now I also look after Westpac Business Bank, which is my youngest child. So I joke I've got 4 kids at work and I love them all equally.
So you've got a few kids at work, you've got a few kids at home, you're juggling it like the rest of us. Today, we're here to talk specifically about the impact of the federal budget on all of us, specifically on women. And we want to say hello and welcome to everyone who's joining us on the call today. Thank you for giving up your time to spend it with Besa and myself. We're really excited. This is time for you. So if you've got specific questions about the budget, about the economy right now, you've got one of the country's leading experts right here on tap, ready to answer those questions. So pop them in the chat and Besa and I will get to as many of those questions as we can throughout the next half hour. If you've got children, dogs, birds joining us today, they are very welcome. If you want to eat at the same time, we understand this is a lunch and learn after all, so please feel free to do that. But let's jump straight into our conversation today. So Besa, the federal budget was handed down about 2 weeks ago now. How are we rating it? What are we giving it out of 10, do you reckon?
Well, look, my kids would say I'm a hard marker. I beg to differ, Meggie. But if I had to give it a mark, I'd probably give it a 7 out of 10. And the reason I'd give it a 7 is predominantly because the federal government kept its foot on the accelerator. And what I mean by that is that the Australian economy has recovered incredibly fast and incredibly well. In fact, we really stand out across the world among the major economies as one of those economies where we suppressed the virus incredibly well, but we also had pretty minimal cost to the economy. Last year, the economy contracted by 1.1%. At the beginning and height of the crisis, they thought it would be much worse. They thought it could be as much as 6 to 8%, and other economies around the world have certainly shrunk by a lot more. So the economy is recovering faster than expected. It's doing remarkably well, but it's still an uneven recovery. We're still not out of the woods. There's still uncertainty about the outlook. And so the right thing for the government to be doing is spending more. And in fact, there are around $18 billion worth of spending initiatives. And the reason they need to keep spending is to keep that recovery in place, sustain that recovery, keep it alive and kicking, and keep pushing down the unemployment rate. And so for that fact, I give it a 7. I don't give it the other 3 because I think it was a little bit lacking on the environment, climate change. And I think they didn't go as far on women as what we widely anticipated leading into the federal budget.
Okay, so I want to touch on that. We're going to come back to some of the other things you mentioned. You're a little bit 7 out of 10 is not bad. It's not an A+, but it's not a fail. It's somewhere in the middle. I want to come back to some of the issues you took with the policies around climate change and things like that. But you mentioned there wasn't enough in it for women. So let's just dive into that a little further. Obviously, women have been high on the agenda in Australia in terms of the news cycle. Rightly so, the past 6 to 12 months with everything that we've seen happening out of Canberra, with people like Brittany Higgins and others coming forward, the amazing Grace Tame, the Australian of the Year, speaking about her story. I'd love to know, Besa, what would you have loved to have seen? Like, let's talk through the policies that are in the budget and maybe some of the gaps. So let's focus on the things that are there to start with. What are the positive things for women in this budget? And then we'll get to maybe some of the gaps as well.
Well, I guess one of the big positives, Meggie, was there was considerable spending towards addressing domestic violence and putting money towards some of the grassroots organisations. Domestic violence is a big issue, and it does contribute to, I guess, the problem for many women in saving enough over their careers, and, you know, when they get to retirement, they don't have enough funds. So it is a big issue for women. So I really welcomed the funding that they put towards domestic violence. There was also spending towards childcare that the government did wrap up in the budget for women. Now, that's encouraging because it will help subsidise childcare further, and that helps lift the participation rate of parents. But what I would say is that a childcare package is for parents. It's not just for women. And so I wouldn't actually wrap that into the women's budget. What I would have liked to have seen more of is that we know that one of the biggest obstacles for women businesses, whether they're starting up or trying to scale up, is access to capital. So it would have been good to see some funding towards making it easier for female entrepreneurs to access that capital. And I know our in-house research has shown or revealed that there's very little venture capital around the world that goes towards female businesses. So that's a big issue. Another big one is that, you know, when women retire, on average, they have less savings than men, and not enough savings for themselves, in fact. And that's because retirement savings, bonuses, if you get a bonus, pay is usually, there's a gap, you know, women aren't paid as much or as well during their career. So, you know, it doesn't really take into account working patterns and the more flexible working patterns of women, because often it is the woman that takes a career break to care for their children, or even to care for their older parents if, you know, the women might not have children. And so having enough retirement savings is a big issue for women. And I think that's not really being well addressed at the moment.
So look, I couldn't agree with you more. One of the things that we know when we think about the gender pay gap, which is something that I'm very passionate about, and it's, you know, my entire business with PepTalkHer. And I know that this is something that Felicity and Kira and the team at Ruby Connection are very passionate about as well, is yes, there's a gender pay gap of anywhere between 13 and 20%, depending on how you crunch the numbers, for all of us in our working life. But when we look at retirement savings, Besa, you know this better than I do, that's where the gap is quite astronomical. And in fact, the fastest growing group of homeless people in Australia are women over the age of 55. That's pretty frightening to me. And I know that's policy that I'd love to see change. Besa, what could have happened? What do you think the government could do at a policy level to sort of address this?
Well, I guess the big problem with retirement savings is that the superannuation policy doesn't really take into account gender. It doesn't take into account the different working patterns between females and males. So I think making some progress or having some policies towards that would be really helpful. So whether that is even going so far as to paying super contributions when women take time off from work for maternity leave, whether it is having more generous maternity leave schemes. So in some countries, like in Scandinavia, their schemes are far more generous, and they also have far higher labour force participation from women. One of the reasons why the government would have introduced this childcare package in this year's federal budget is to try and lift the participation of women in the workforce, because it's about 10 percentage points below that of men. And lifting labour force participation helps productivity and helps economic growth over the outlook period.
So I think what you said there is very, very interesting. And you mentioned that in some Scandinavian countries, they're actually quite progressive when it comes to their retirement savings, specifically for women. Besa, I want to acknowledge one thing you said earlier too. You mentioned that in this budget, there was a lot around parental leave, but you made the very salient point that in fact, childcare policies are not a female issue. They are not a women issue. They are a parents issue and a society issue. And I just want to, I did a little applause emoji for that because I think that's really important. I think often
a bugbear for me because it really is a parents' issue. It's not. It shouldn't just be wrapped up into women. But Meggie, I realised I also didn't answer your homelessness question. But I think by not addressing pay gaps and not addressing the different ways that women work, then that also can, I guess, have quite a strong correlation with homelessness. And you mentioned that, you know, that group of women over that age was it 45 to 50 is the fastest growing homelessness?
Over 55, you're quite right, over 55, yeah.
But, you know, that is when you're starting to approach retirement. I mean, before I had children, I used to regularly help at an inner city homeless shelter. And back then, and this is going back about 15 years, it was certainly the case that there wasn't enough space for anyone that was homeless. So it was an issue not just for women, but also men. But women had to be prioritised because it was an even bigger issue for women. So men could only get three spots a week for emergency shelter, which is where I was working. Women could get more. But certainly that is linked to the financial situation of women. And by helping women participate in the labour force better, by improving the pay or reducing the pay gap rather, and also addressing the fact that retirement policies don't account for the way we women work, then that sort of makes it all a bit worse, I think.
Yeah, and we've got a lot of questions coming through on this, Besa. So you've obviously hit on a very interesting topic for everyone here today when it comes to superannuation and policy specifically for women. If you've got a question, please pop it in the chat. We would love to hear from you. I'd love to get a bit of a sense of everyone in the room today. Can I get everyone to just pop into the chat? What is one word that helps, I guess, describe how you're feeling right now when it comes to the budget and how it's going to impact you and indeed women more broadly? So if there's one word that describes how you're feeling right now, love you to pop that in the chat for us right now. Interesting. Whoa, that was very quick. Okay, I wasn't expecting this. This is interesting. So we've got unheard, unfair, disappointed, uninformed, ignored. This is interesting, Besa, because you know, when we, from an economic perspective, we gave the budget a 7 out of 10, not an A+, but not a fail. And it's interesting, a lot of people on the call are telling us that they're disappointed, they're despairing, they're feeling an inequality. Whoa. Okay, so this is interesting.
Some of the positive elements, Meggie. So I pick on the positive elements, which is there was an extension of some of the business initiatives that were announced in last year's budget. So in particular, there was a 12-month extension to the loss carryback scheme, where you can book losses up to 22-23 against profits that prior to 2018, 2019. So for female businesses and obviously other businesses as well, that can help boost cash flow. There was also the extension by 12 months of immediate expensing. So for businesses with turnover of less than 5 billion, they can access that immediate expensing for eligible depreciable assets. So that's in order to try and encourage businesses to spend. So that will help female businesses spend and expand. And obviously by businesses spending and expanding more, they then need to hire more people. And if you're hiring more people, then a person that has a job and is feeling secure about that job is more likely to spend on the goods and services that businesses produce. And so it becomes a bit of a virtuous cycle. And that's why it's so critical to try and reduce the unemployment rate. And the unemployment rate has come down to 5.5%. It never got to the 10% that policymakers feared last year. It got to almost 7.5%. It's now at 5.5%. JobKeeper's ended. It looks like JobKeeper will be a speed hump at best. There will be some disruption to jobs, but it's not going to prevent the unemployment rate continuing to fall through this year and also next year. And that's still something that women that are the owners of businesses will benefit from.
So I want to talk specifically to women-owned businesses in just a second. Just for a moment, though, I want to acknowledge, thank you to everyone who's popped in the chat how they're feeling right now. Besa, you know, this idea that unemployment is actually doing quite well, growth is actually doing quite well, considering the global economic situation and everything that's happened. How can, you know, there's a sentiment in this session today that people are feeling unheard and disappointed from a policy perspective. I wonder from you know, you're an economist, you live and breathe this stuff better than I do every day. What do you think that all of us can be doing today to keep pressure on, I guess, to keep the pressure on the government to make sure that, I suppose, we don't feel as disappointed or as unheard in future budgets?
Yeah, I mean, that's a really good question, Meggie, and we've all got ministers in our local area that we can write to or contact. We're probably, each and every one of us, we have a network, so we can be speaking to our network. If we're part of associations, and Ruby very much so is like an association, I guess, we can be sharing what we think the government should be doing and how they should be taking that approach. And I think there are people that do listen. And so it's important to, I guess, speak up and share your thoughts in a positive way so that people can listen, because there's lots of things we can be doing. We are in the midst of a once-in-a-lifetime shock from COVID-19, and the government has to focus on minimising the impact from that shock and minimising the scarring to the economy from, you know, trying to reduce joblessness. But also, it can also be a really good time to introduce reform. And, you know, what we saw in this year's federal budget is that keeping the foot on the accelerator to keep spending happening and keep promoting the economic recovery that's in place. But a lot of it was around tinkering with existing measures. So building on the infrastructure spending, which is an important platform, extending the tax initiatives for businesses, extending the tax relief to low and middle income households, but there wasn't sort of any fresh new structural reform. So I think keep the pressure on by speaking to your networks and speaking to your local ministers, because I think things are improving. They just could run a bit further.
Absolutely, absolutely. And that's the fortunate thing about living in a democracy, isn't it? That we have the right to voice some of the disappointment that we're certainly seeing in the chat below. Equally, if you have a different opinion, we would love to hear from you too. I will acknowledge that there were some measures in this budget to support STEM initiatives, particularly for women. So, you know, that's a positive too. For those of us in the call today, you can see quite a few successful business owners in the session today. Hello to all of you out there today. Some people on the call are job hunting. Some people work for small businesses. From an economic perspective, which, you know, you are the expert at, what should we be doing right now? Like, should we be worried about where the economy is going? Should we be buying property? Should we be scaling our business? Should we be borrowing money for our business? Or is it kind of, are we still in that potential recession mindset? How should we be thinking about business right now, do you think, Besa?
Well, I don't think we should be particularly anxious. I think something that has been quite obvious since the start of the pandemic is that the economy has continued to beat expectations. It's beat the expectations of the federal government, it's beat the expectations of the RBA, and it's beat the expectations of the Economist fraternity that I'm a part of. So, and I think there's very good reason to anticipate that that this economic recovery that we're in the middle of can continue to keep running, but also broaden out and deepen, because of course at the moment it's quite uneven. Now, there are numerous surveys that measure how consumers are feeling and how businesses are feeling. And the latest survey around business sentiment shows that business confidence is actually at a record high. Since the survey went back, which is around the mid-1990s, business conditions are their best on record, and capacity utilisation is at a record high. And then you've got these tax initiatives that have been extended that will help provide initiatives to spend more, and in addition to that, also provide a cash flow boost. Interest rates are incredibly low. So the Reserve Bank has a cash rate of 0.1%. It's incredibly low. And they've also got a yield curve control program where they're buying bonds to keep the 3-year government bond yield at 0.1%. And then they've also got a quantitative easing program where they're buying bonds of maturities between 5 and 10 years to keep lending rates lower than otherwise would be the case. So lending rates or borrowing rates are quite low compared to history, and they're attractive. So it's a good time to think about, I think, expanding and taking advantage of the opportunities that arise. At any point in the economic cycle, there's always opportunities and there's always risks. I've been in this job for 20 years, and it really doesn't matter whether it's a recession or an upturn or something in between. There's always a risk and there's always an opportunity. It's just the nature of those risks change and the nature of opportunities change.
You summed it up really well there, isn't it? It's like if you look at the economy, if we step back and look at it over 30 years, we wouldn't probably be as stressed as perhaps a lot of us have been over the past 18 months of the highs and the lows. You mentioned that interest rates have sort of troughed out right now. Given that they are so low, to your point, is this an opportunity? If we have a business, should we be thinking, about contacting Westpac, St. George, whoever our local banker is, to have a conversation about opportunities to borrow money right now, or indeed opportunities to reduce our mortgage rate? Is this actually an opportunity in that respect, Besa?
Well, the first thing I would say, Meggie, is that the pandemic really shone a light on how important it is to stay in contact with your banker. And also for the bankers to stay in contact with the government, and everyone just collaborates. So I would say keep the open line with the banker, keep talking to them, and really ask a lot of questions. I think that's really important because that's what they're there for. And a good banker will love to be talking to you and would love to hear from you. The second thing I would say is that the RBA at some point will lift the cash rate. Now, the Reserve Bank is saying they're not going to do that before 2024 because they don't think the conditions will be met in the economy for that to happen before 2024. But the quantitative easing program and the yield curve control program is going to roll off before that time. And it's quite possible that if the economy continues to beat expectations, that they might look at late 2023 for raising the cash rate. Now, rates are still going to be low for a while, but what's been happening in financial markets is that swap rates troughed late last year, and business borrowing rates and fixed home loan rates are priced to swap rates. It's the variable mortgage rate that moves when the RBA changes its cash rate. And the reason why they've moved higher is around the world, because we're heavily influenced by what's happening. At the longer end of the curve, it's incredibly influenced by what's happening with the US bond market. But even aside from that, in Australia and around the world, investors are reassessing the economic outlook. And what they see is a better growth outlook and a possible lift in inflationary pressures. Now, central bankers are saying, well, this lift in inflationary pressures is transitory. It's because of the lockdown last year, there's pent-up demand, there were tighter restrictions last year, there's a shortage of raw materials because there's still problems with the global supply chain, and in Australia you've also got additional problems at the port, so that's all pushing prices higher, but it's transitory. International borders are closed, it's transitory, because once international borders lift, once the global supply chains, I guess, resume to normal as, vaccines roll out further across the world, then this is transitory and we can look through it. But I guess the bottom line is they troughed last year, they're a little bit higher than where they were last year, and eventually they are going to keep moving higher. So now's a good time to think about possibly fixing if your personal financial circumstances suit fixing, but it's a really good time to have that conversation with your banker.
Yeah, and really great point that you make there, Besa, is that, your bankers are there to help support you, right? They are a resource. You should absolutely lean into them. We can't speak on behalf of every single banker, but I certainly can say the Westpac crew are amazing. The St. George team are excellent. Reach out to them in your local branch or indeed via email or the website as well, and they're no doubt more than happy to have a conversation with you about some options. A couple of very interesting comments. Time is flying. We've got 5 minutes left. If you've got questions, pop them in the chat. An interesting comment that a man is not a financial plan. Another comment that Jess Hill's documentary, See What You Made Me Do, about coercive control and domestic violence, very powerful, highly recommend it. And just an acknowledgement there that there were some funds in the budgets to help support that, but certainly not enough, unfortunately. And just a side note to say that Westpac and a lot of their subsidiary brands have a policy specifically to support people going through a domestic violence situation. So grateful for progressive policies like that. There is a very interesting question, Besa, that I want to put to you that I think is interesting, and that is someone on the chat is sort of saying that, you know, they're quite young and they're a little worried about all this borrowing that's going on from a federal government perspective. So JobKeeper, a lot of the policies in the budget, they're concerned, or they're wondering, should they be concerned that this debt, that this borrowing capacity of the government is actually going to have an impact on them in the future? It's a really great question, and love your perspective on this, Besa.
Well, I guess you've got to think about, if they didn't do all that spending or provide all of that stimulus last year and continue to provide that stimulus, then what would have been the alternative outcome? And it would have been much higher unemployment, a much deeper recession and more scarring. So if you like, you can think of the debt burden as the cost of fighting off COVID-19. It is certainly the case that larger deficits are still a feature of the future, although they are gradually getting smaller. And it is a case that the net debt burden is going to rise. What I would say is the best way of repairing that net debt and the budget deficit is actually growing the economy faster. So last December, when the federal government provided their mid-year fiscal and economic update, they actually estimated that the federal budget deficit for 2021 would be around 198 billion. And then when they actually delivered the federal budget this year, they said, well, no, actually, it's going to be about 160 billion. And that's because the unemployment rate was lower, so not as much income support payments to those on the unemployment queue. The economy grew faster than expected, so more companies paying tax, and commodity prices went through the roof, particularly iron ore. And so that helped the budget be smaller than what they anticipated last year. Another really important point about net debt is that servicing that net debt is very low. The government can issue a bond into the global marketplace, and you know the yield on a 10-year government bond is below 2% for Australia. So it's incredibly low to service that debt, and in fact lower than, you know, one of our worst recessions prior to COVID-19.
Yeah, and I think your point about the fact that interest rates are low to service that debt is really interesting. A few people asking questions specifically to their situation. Should they be borrowing money right now to buy a house? Unfortunately, we can't speak specifically to all of your personal situations as much as we'd love to, as much as we wish we had ours. But do get in touch with some experts. Do talk to your branch manager, and they can speak more specifically to how much potentially you can borrow given your situation and what that interest rate would look like for you and whether you'd be able to service that loan. But great questions to be asking. Some amazing resources on Ruby Connections website. The link is in the chat. Thank you so much, Kira, for popping that in there. We've had a bunch of other questions coming through. Just quickly on superannuation. This is obviously a topic specifically pertaining to women, Besa, that people are very interested in. People are saying, should we be worried about the fact that some women, a lot of people, men and women, but should we be particularly worried if women took money out of their super? And if anyone on the call did make that decision for whatever reason, is there anything they need to do now to, I guess, counter that and prepare for their retirement in future?
Yes, there was that ability to withdraw super during COVID-19, and that was to help support consumer spending, which has really led this economic recovery. I'm personally not a huge fan of touching super. I think it's too easy to access those super funds, even if you didn't need it. In fact, you know, I've got friends that accessed it simply because they could access it. But, you know, the whole point of that super balance is trying to grow your super so that when you retirement, you've got enough, number one. But number two, there's a tax advantage to having, you know, contributing to that super balance. So when you withdraw the money to use it for something else, then you are losing that tax advantage, and also your balance is getting smaller. So I guess it depends, what did you do with that money compared to if you'd left it in the super balance. But I'm not personally a massive fan of being able to, giving people the access to super.
Yeah, because it is a bit of an insurance plan, I guess, isn't it, for our retirement, which seems like a long way away. But from everything my mum tells me, yeah, it does indeed. Besa, I feel like we could chat to you for the next 3 or 4 hours. Unfortunately, we've got to wrap things up. What's the one thing in the budget that you want everyone on this call to be aware of and that they should totally be taking advantage of?
Well, I think it's those business initiatives, because I know when they were first launched last year, some businesses didn't even know about them. So just be aware that there are those initiatives and you can take advantage of them. They are targeted to businesses with a turnover of below 5 billion. If you need more information, reach out to your bankers, reach out to your accountants. Make sure you take advantage of those initiatives, because they really are quite generous, I think. Like there's not a cap, for example, on an eligible depreciable asset. So that's very generous. And, use that towards, I guess, supporting your business and expanding your business if you can. So I would say look out for those 2 measures.
Absolutely. And the other measure that I want to just keep everyone in the loop with is, I'm just going to pop it in the chat here, also the Females Founders Initiative. For anyone on the call who has their own business, that's something to be aware of as well, that you can actually apply. One of the grants that's not from this federal budget, but that's certainly worth keeping in mind if you do have your own business. Besa, thank you so much for your time. You're an absolute gem. You're a guru on all things economics. We've had a few questions come in on universal basic income, self-managed superannuation funds, real estate. We are going to run separate sessions specifically on those topics, because they are, they're worth a whole half hour in and of themselves. So we're going to make sure that we do those topics justice in future. So make sure you keep an eye on your inbox for the future Ruby Connection sessions, and we'll be sure to keep you posted. Besa is on LinkedIn. I've popped her link in the chat, so make sure you follow along for her updates. Take a look at the Ruby Connection free resources online. They're really, really valuable. Talk to your bankers, chat to them about the interest rate that you're paying. Is there a way to sort of mix that up, change it so that you save some money? And if you're considering borrowing money for your business, take a look at the interest rates. It might be worth a think given the situation right now. Besa, Deda, thank you so much for giving us your time today. We're really grateful to you.
Thank you.
Really appreciate everyone. I'm going to pop another link in as well. We are running a challenge specifically to help you recalibrate your career, because it is almost halfway through the year. Can you believe it? I certainly can't. But we will be back in 4 weeks' time for our next Ruby Connection session. We're so excited. If you've got ideas for topics, please send us through an email. We would love to hear from you. But I appreciate everyone asking the questions. As I said, universal basic income, self-managed super funds, real estate, specific topics that we will touch on in future. Enjoy your Friday. Have a lovely weekend, and we'll see you all in a month. Thanks, everyone.